Alright, for this video we want to look through a sample form 941, which is the employer's quarterly federal payroll tax return, and this is going to be for the second quarter of 2024. Now, this example, we have an S corporation with one shareholder employee. I've already got a video posted where we covered the first quarter payroll tax return, and so this is going to be the second quarter form 941 for the same company. So check out the link below in the description if you want to watch that one first. They're going to be largely the same. We're just going to have some differences with the payments made during the quarter. So I've got the 941 here, which we'll go through. I've got the Excel workbook here for the company, so we'll talk about the monthly payroll, the quarterly and the yearly amounts, and all the taxes that are withheld. And then I've got one slide here covering some background on the 941 and more details on the fact pattern. So the 941 is the quarterly payroll return. It's generally filed within 1 month after the close of each quarter. So for example, if you have a first quarter payroll return that's ending on March 31st, 2024, the 941 is due by the end of the next month, so by April 30th, 2024. Now, really important here, once a business starts filing these returns, even if their payroll is zero for a quarter, they should still be filing it to get that zero return into the system. Otherwise, the IRS will often send you a notice asking why it is you haven't filed a payroll return for that quarter, so you're better off just going ahead and submitting that. Now, there are exceptions for seasonal employers, right? But in this case, that's not going to apply to this example. Now, what are unique issues with single shareholder S Corps? So shareholders that own greater than 2% of the company and actively work in the business need to be paid reasonable compensation. Right now, the reasonable compensation amount, it also includes any kind of health insurance premiums that are paid for the shareholder employee. Those are added to their federal income tax wages, but they are not subject to Social Security or Medicare. And so we'll see on the worksheet how we account for those variances. Now, with the shareholder health insurance, even though it's being included in their wages and included in their income, they are going to get a deduction on their personal Form 1040 for the self-employed health insurance premiums. All right. Now, we won't cover that in this video. I do have some links below where we look at that reporting and how that's done on the 1040. So go ahead and check that out if you'd like to have a look at those. Now, what are some other filings that are often required when we have payroll? Well, Form 940 is the annual federal unemployment tax return, so that doesn't have to be done quarterly, but it is an annual filing. Now, depending on what state you're operating in, you might need some state payroll tax returns for state withholding taxes. And then even for states that don't have a income tax, might still require a state unemployment return. And so in our example here, where we have a Florida corporation, Florida does have state unemployment tax, right? And so there is a state unemployment tax return and payment that has to be made. Now, in our example here, this is a continuation of the first quarter Form 941. So John is 100% owner of a Florida S Corp. He estimates that the S Corp is going to have profits of $50,000 over the course of the year. And the health insurance premiums that the company is paying on his behalf are $389.26 a month. Now, he initially sets his salary at $1,000 per month, not including that health insurance. And he plans to adjust kind of up or down towards the end of the year what a reasonable salary would be. So with single owner S Corps, you often don't really know how profitable you're going to be. So what a lot of taxpayers will do is they'll set their salary at kind of a reasonable amount, but maybe on the lower side. And then at the end of the year, they can issue themselves a bonus to try to get the reasonable comp up to where they think it needs to be. Now, in this example, we're looking at John preparing his second quarter Form 941. He's already done his Q1 return for January, February, March. And so now he's using the IRS EFTPS system to make a payroll tax deposit. So he makes a deposit of $600 on June 30th, 2024, and he marked that as being applicable to the second quarter payroll period. So it's Q2 2024. All right, so how does that change his Form 941 reporting? Well, first let's have a look at the Excel workbook. So I did cover this in more depth on the first 941, so if you want to, again, go ahead and check that out. We'll cover some of these items in more detail, but effectively what we're doing is we're calculating his total wages and then the amount of payroll taxes that are imposed on those wages, and then also taking out the federal withholding. So his base comp is $1,000 a month. He has the shareholder health insurance premium, which is being added to his wages because it's included. It's going to be included in his Form W-2 Box 1 wages. So his total monthly salary, if we will, is $1,389.26. And so then the quarterly amounts are just 3 times that. So $4167.78 is the quarterly wage that's paid to John. That's all his compensation. Now the payroll taxes, Social Security and Medicare taxes, these apply only to that compensation, not the health insurance. So the shareholder health insurance is not subject to FICA. So it's not subject to the 6.2% Social Security, and it's not subject to the 1.45 Medicare. So when we look at this calculation, you can see here that we're just multiplying that $1,000 by the 6.2%. And then the same for the Medicare, right? 1,000 times 1.45%. So it's not being calculated on the total gross wages. The federal income tax withholding, we looked this number up using the manual payroll withholding charts based on this gross wage. And so he has to have $19 taken out of his paycheck every month. Now, if you have payroll that is weekly or biweekly, then you're going to have different rates, right? And so, but in this case, we're doing a monthly payroll calculation for John as the sole shareholder employee. So we've got the monthly amounts, the quarterly amounts. We've got another deduction here. This isn't reported on the 941, but it's being included in our reconciliation so we can see how much of a net paycheck John actually gets, right? So the shareholder health insurance is being included in his income, but the S corporation is just paying that directly. So if we're including it here, we want to also account for a deduction from John's pay. So on a $1,000 a month, basically a paycheck, John walks away with $904.50, and that's because he has these taxes up here taken out of that check. All right. Now, the reconciliation at the bottom here is for the total of the employee taxes up here plus the employer share, right? So remember, with payroll taxes, the one half of that FICA is borne by the employee, and then the employer picks up the other half. So we've got the employee share of the Social Security, the employee share of the Medicare. We've got the employer match, right, 6.2% on the same wage, and then the 1.45% match as well. And then the total federal income tax withheld of $19 coming out of his check. So each month, the total payroll tax liability that the company must send to the IRS is $172 or $516 for the month, okay? And then up here on the top right, I've got just a projected W-2. So what this will likely look like when we prepare the W-2, assuming no changes here. So box 1 wages is the total $16,671, but the Social Security and Medicare wages is only the $12,000 because we're not including the shareholder health insurance as subject to the payroll tax. All right, and then we have federal withholding, $228. And then the Social Security and Medicare withholding. And then the S Corporation health insurance is reported in box 14. All right, so now let's have a look at the return itself and start plugging in some of these numbers. So we've marked Q2, so April, May, and June. We've got the company EIN, name, and address. And then in part 1 here, line 1, we've indicated we have 1 employee for the pay period. Now, line 2 is your total compensation. So this is the base compensation paid to John, plus that inclusion of the shareholder health insurance premium. So $4,167.78, that's the quarterly amount of the base comp plus the shareholder health insurance inclusion. So he's got $41,67.78. The total federal withholding was $57 for the quarter, right? That's $19 a month times 3. And then on lines 5A through D, we have the amount of wages that are subject to Social Security and Medicare taxes. So we're not using the same value that we have up on line 2. We have $3,000 here, $3,000 in taxable Medicare, and so the total tax, Social Security tax and Medicare tax is $372.87 respectively. So when we get to line 5, the total Social Security and Medicare, we add up these two values, we have $459. And then when we add the 57, we get line 6 of $516. So $516 is the total amount of tax that's due for the quarter, and that reconciles with our worksheet here, right? $516. Now, in this case, the company's payroll, really straightforward, right? We're not making any adjustments for sick pay, group life. We don't have any increasing research activities credits. So all of these remaining line items can just be zero. Now, they might apply to your company, right? It depends on your circumstances, but in our case, none of these are applicable. So the total taxes after adjustments and any non-refundable credits for us is going to be a line 12 amount of $516. Now, remember the fact pattern. We had John started using the EFTPS system to make some payments, and so he made just an even round $600 deposit and had it applied to the Q2 pay period. So on line 13, we've recorded the $600 that was paid, and so because the $600 exceeds the amount of tax that he actually owes, he has an overpayment. So line 14 is blank because we don't have any balance due. But we do have an $84 overpayment, right, because line 13 exceeds line 12. So $84 is the variance there. So we report the $84 variance here, and then you check how you want this applied. You can either get the amount refunded to you, or we can just apply this to our next quarter's return. And that's what we've done here for simplicity, right? If this was a much larger amount, then perhaps you would want the amount refunded to you if you made too much of a deposit. But in our case here, $84, we're just going to roll it to next year's, next year's, but next quarter's return. And then we'll be sure to pick it up here on line 13 as an overpayment credited from the prior period. So we've got an $84 credit applied to next year. Part 2, because our payroll tax liability is less than $2,500, we can check the top line item here. So if you're less than $2,500, you don't have to make monthly deposits, or you're not making semi-weekly deposits. And you can also actually make the payment with the return if you have under the $2,500 liability. In the first quarter, John wrote a check with the return, but in this case, now he's using the EFTPS, which is recommended, much easier to use. So he marks top line item less than $2,500. Part 3 is blank because it doesn't apply to us, right? We haven't stopped paying wages, and we're not a seasonal employer. So part 3 is blank. In part 4, John has listed himself as the third-party designee. He's also the owner and CEO, so he is authorized to speak with the IRS anyway, but you could input, let's say, another employee, or a lot of times it's a tax preparer that's maybe doing the Form 941 for you, or if you have outsourced this to a third-party payroll processing company, they might be listed here as the designee also. In Part 5, enter the information, date, sign, and enter a contact number that you can be reached. And then the pay preparer section is only applied if you are, in fact, using a pay preparer to submit this. In this case, we've set this up where John is preparing this himself. So John's doing all this himself, so there is no paid tax return preparer. All right, and then the last form is the voucher. In this case, we don't actually owe any tax because we have that overpayment, but the voucher would be used if you're going to mail an actual check. If you're just making EFTPS payments online, then you don't need the voucher. So in this example, we wouldn't be submitting the return with the voucher because, one, we have the overpayment because we've deposited too much, but also we're just making the payments via EFTPS now. All right, so that covers it for this tutorial. Hope that was helpful. Any questions, feel free to leave a comment below. And as always, appreciate you watching, and I look forward to seeing you on the next video. Thank you.